estate rock stars, welcome to the whole enchilada of real estate investing, the only podcast that serves up the full feast of street smart strategies to build wealth and take control of your financial future. I'm Lou Brown, and I've been in the real estate game since 1976, so I've learned how to make the whole plate worth it. Each week, I'll be dishing out creative financing hacks and proven systems that help investors build multi-million-dollar businesses. No fluff, just the good stuff, straight from the source. Ready to dig in and start making deals? Let's get to it. Welcome, everyone, to the whole enchilada of real estate investing. I'm Lou Brown, and I'm so excited to have with us today. So welcome with me today, Jake Clopton, and he's going to tell us who he is and where he's from and what he does and give us some insights that I know we're going to be able to benefit from. Take it away, Jake.
Cool. Yeah. My name's Jake Clopton. I started and still run Clopton Capital. We started in 2008-9ish era. Before then, I worked for an interbank hedging products trading firm, trading like 3-month LIBOR and Fed funds and Treasury futures, stuff like that. And so what happened in 2008-9, it was a credit crisis, and we started an intermediary to help people find money to fund deals. So it was really just a finance company, right? The capital markets firm for a very long time. And then recently we've really branched out to offer a lot of different service verticals for real estate, which really came from me just one day looking at a HUD statement and being like, going down it and be like, who are all these other people that are making money in this? So now we are still a finance company, but we're also an insurance agency focused on commercial property. We opened up a sales brokerage, so we help people find and sell property. We do commercial solar. We partner with ABGI to do cost segregation. We are a 1031 qualified intermediary where we actually facilitate and hold money for 1031 exchanges. And if that weren't enough, we're working on bringing on a broker-dealer side to do equity for real estate transactions. But I think that's going to be the last one. So we got a lot going on, and I think the philosophy is less looking at these as individual products, but looking at it more as who are our clients and what are all of their needs, and seeing if we can really offer like a full suite of products that, you know, they're going to need for every deal, other than having to piece it together through 10 different companies. You know,
there's a lot to be said for being vertical. There's a lot to be said for being able to integrate all these benefits into one organization. So I definitely get what you're doing. We have whizzes: Sign Whiz, Voice Whiz, Mail Whiz, Credit Whiz, Mortgage Whiz, and we've done the same thing. Find the best in class, find the best that have something to offer, and be able to bring it inside your organization and benefit all that you're doing. So
yeah, some of these are partnerships, right? Like it just makes sense. Like the cost seg stuff, that's a lot of like specialization. So we partner with somebody, but everything else we've actually built the companies internally, right? So we are the actual insurance agency. We are the actual 1031 QI. We are the actual sales brokerage, which takes a little bit longer, right?
Yes, it does.
But yeah, it's all internal.
Oh, excellent. That's really good info. Now, what is your main focus these days?
My day-to-day is arranging debt for commercial real estate transactions. The deals that we work on are anywhere from $1 million and up. Pretty much all asset types, permanent loans, bridge loans, and construction. We do some really straightforward stuff, but we also do some really complicated, creative cap stacks. So as an example, we'll do like just a straightforward 5-year fixed 25-year AM on a multifamily property. And then the same day, I'll be working on historic tax credit gut rehab in Louisiana. So a lot of different bandwidth, but you know, I've been doing this for almost 20 years. So I've yet to see somebody send me something that I haven't seen before and work on.
Oh, I love it. I love it. I've got a project I'm going to be talking to you about for sure that is a major league project. I'm looking forward to working with you and seeing what we can do together. So someone that is in the in this single family space, or maybe they're just getting started in the business and they're looking at, okay, one of the big things that would stop me from being able to buy single family or multifamily properties is access to capital. So what would your advice be to someone like that?
Are we talking about more on the down payment equity side or just finding loans in general or?
Finding loans in general. So let's say that they found a single family or small multifamily project and they need access to capital in order to do the deal. What would your advice be to them?
Yeah, it's always a great idea to work with somebody like me that knows what they're doing and where to go, especially when you're doing acquisitions, right? Because you have a time frame here. The differentiator, and considering we're talking about single family homes and small multifamily, is most people I see coming from that space think of lending in this realm as they would maybe like a residential loan. The biggest difference is there's no pre-approvals in commercial. Right. And when you go to buy a home, you get a pre-approval, you're pre-approved up to this month. That's because the source of repayment is your personal income, not the house you're buying. Right. In commercial, it's the opposite. The main source of repayment is like the income generated by the property. So you can see how it's impossible to get a pre-approval. Right. You don't know what that is until you bring me like the property and I can underwrite it. That's somewhat of a learning curve for a lot of people that are like in the small balance space or just getting started in that area. The other, in like the benefit that like I would bring, for instance, is I've been doing this for 20 years and the efficiencies I have, I can talk to 200 bankers in 48 hours. I don't think you could do that. So that
Yeah, baby.
Just calling a bank and getting through to a commercial guy is in of itself challenging sometimes. They don't pick up the phone very often. And a lot of times you call the branch and they're like, what do you want to talk to? So that's really what we bring to the table. The other aspect of this, if somebody was going to do it on their own, is don't take the first answer that you get from some guy at something. If you're out here looking for unrealistic loan terms, you're like, I want to finance 100% of it at 3%. That's not going to happen. But if you're looking for a realistic deal, right? Let's say you're like, all right, I'm looking for 25% down without a seller carry. And I want just kind of like a market interest rate and a 5.25 or 5.30. I see a lot of people that they talk to one lender and at a bank, and they're like, when they get like the answer that they didn't really want, they're like, well, that must be the answer in the entire marketplace. Again, it's not like residential, where residential has very conforming loans and they're all similar. In commercial, every single lender, every single bank, every single credit union is going to be a little different. And some of them are a lot different.
Yeah.
And there's an instant phenomenon that I'll tell you that happens and one of the reasons why we do such large outreach is I will, on any one deal, I'll take it out there. And I'll talk to maybe 4 people at the same bank, and I'll get 4 different answers for the same deal.
Oh my gosh. Oh my gosh. You have put your finger on something. Of course, I've been in the business for over 40 years, buying, holding, and selling property. And I love that you just shared that, because just because you say something, as you said, you can definitely think that, I guess that's how it is. I guess I'm going to have to accept that. And then you find out that it really does depend on who you're talking to. And it does depend on what questions you ask and what presentations you make. If you're not prepared on your side with the full story to tell, then what happens is they take a piece of that and morph it into some other belief about what you just said. And all of a sudden you miss the opportunity because you simply didn't have your act together. So how do you advise people to get their act together before they come see you?
Yeah, that's exactly right. Part of what I do is helping people get their act together. But you said one word that I really focus on in this business, and this business is like 90% presentation, right? It is how the deal's presented, how you present it to the people you're presenting it to, and it's 10% economics. If the deal works, it works. Right? We all know that. It's not rocket. This is like 3rd grade math we're dealing with, but it's more about presentation, because I can take the best deal in the world and I can make it look like shit and get somebody to decline it, right? Like, or I can take the worst deal in the world, maybe the numbers still work, but present it in the right way. If it has challenges, present them in the right way up front, and here's the mitigants to these challenges, yada, yada, you know what I mean? And
Yes,
a lot of times when, you got to think about this business less like numbers and economics, and more like it is 100% people at the banks and the places we're dealing with. Right?
definitely.
And you got to understand that you're presenting it to a person who then needs to go present it to a credit guy. And candidly, even their relationship between each other matters. Because I've seen
Yes,
deals this is why I told you I get different answers from 4 different people. And like the one guy is, I don't know, my credit guy is not really happy with me today. So I've gotten that answer before. So, again, presentation, but just really present things in a meaningful way where you understand that this business is people first and
I
numbers.
love it. You're so right. One of my favorite sayings is not what you say, it's how you say it. And when you present something in a certain way, then people can hear what you're saying versus not hear what you're saying. So I love what we're giving people
And
an
also don't say
insight.
too much. Present your case and then that's it. You don't need to offer more information than they need. Because every time you put something out there, they got to ask questions about it. So.
That's right. That's why those one pagers are so important. Those executive summaries, just get to the facts, just the facts,
And
man.
I'm not saying hide stuff at all. If
Right.
there's things that are going to come out, you need to flush those out up front.
Mhm.
But just present the salient facts. And and I tell people this like just over and over, when things come out later on, it looks like you were hiding something and that's what will kill a deal. But if you present it up front, we know about this, nothing's perfect, and here's what we're going to do about it, then people can get over it. But it's when they come out later on, that's the challenge.
Here are the challenges of this deal, and here's how we are going to deal with those. That's a perfect thing.
Yeah. And I'll
Absolutely.
literally, when I send over a deal, I'll literally be like, hey, here's the pros, here's the cons. And the pros outweigh the cons.
Amen. That's how you get approvals. So give us some insight into costs. What does someone have to consider when working with you?
Our cost structure, candidly, is pretty simple. On the brokerage side for mortgages, we have a 1% broker fee. If it's 35 million bucks, it's not going to be 1%. But we have a 1% broker fee. We don't really even do exclusives for the most part. We really just work on deals that we think our time is going to go towards something, and let's just pay at closing. So I would say, as far as, is it worth it? Is the closing the deal worth it? Is getting good economics worth it? Is it getting it done the right way worth it? Then absolutely yes.
Perfect. I love that. And definitely there's all kinds of connections that happen in our world, right? That I know somebody that you don't know, somebody's that I don't know. And when we can work together, we're able to connect the dots and cause things to happen and get paid in between. So it's another distinction for people watching today that you might find something that you would never consider, but that doesn't mean it's not a deal for someone else. And you want to bring those to the table as well, because who knows, that might be something that can work. I do a lot of partnering. I do a lot of lending from a private money side with my single family investors and small multifamily investors. And sometimes they want me to partner with them simply because they also want the coaching. They want to be supported through the process, and they know that they don't know what they don't know, and that someone that's been there and done that can help them with that. So with your 20 years experience, you definitely have some insights into how to best navigate that world, which is highly valuable. And guys,
And that's a good point you just said, right? Allowing somebody to watch you, or watching by example, is the best way to learn. Because even if somebody said, hey, can you teach me how to do this? They don't know what they don't know, but also you don't know what they don't know. I don't know exactly. Do I just start from the beginning? It's like, hey, open this door. I'm like, okay. Do I need to tell you to walk towards the door, grab the door handle, turn it, pull it? I don't know which steps you're missing here. So it is challenging. So I know why they want you to partner. And a lot of guys on the commercial side do that too, right? They'll co-GP some large construction deal with some group to watch the whole thing and what they went through.
yeah, that's powerful and definitely great advice. As we're navigating this experience together, when someone wants to present something to you, how do you suggest they best bring it to you?
It's kind of like a simple process. The best way is just to start sending stuff over. and I'll look and see what we have and then follow up with questions. And then really I want to hear the story too, right? Like looking at the documents is one thing, but there's always a story. This is not residential lending where it's a house. Like every single property is different and every single strategy is different. Every single like property itself and where it's located and all this stuff is different. Hearing the story definitely does matter. We'll do a call, we'll get the story, we'll get the P&Ls and all that economics and stuff. The biggest difference is even if it's just like a 4-unit or 10-unit building, it's an operating business. And that's why it's so hard to have a rocket mortgage in commercial lending. It should, because like it's an operating business. It's not a residential house that's conforming and easy to do. These are all operating businesses and every one of them are different. And if you don't pay attention to every property and the things that are different about it, it's number one, it's going to be hard to get it done in the first place. But then even the lending side, right, you're going to run into a lot of challenges.
I'm so glad you pointed that out because it's absolutely true that residential real estate and an operating business are two different things. And I've had people built a hotel from the ground up. We have a motel, we have commercial properties. And I make the distinction when people are talking, oh, tell me about that, Lou. And I say, no, wait a minute, you got to understand, this is not real estate. It just happens to be resting on real estate, but the rest of the story is this is an operating business. You have to look at it from cash flow perspective, from cap rates, and from future income that you can generate through value add and things that you can do to cause things to happen with that particular investment. And what's your story? What makes you think so? And where can it go from there?
Admits that it would be impossible to really have a rock more in like commercial, because think about it, even residential lending where you have a lot of like rock more like online, like automated stuff, you're mainly underwriting W-2 income, right? With that type of stuff. That's easy. But as soon as you get somebody who's self-employed and running a business and their income, you have to underwrite them as a business, that whole thing falls apart.
Yes, that's a very good point.
No longer, all of a sudden, you got to get all these other people involved. I mean, it's the same disconnect with what we're doing versus residential. Like there's more forensics involved here. You got to understand it more.
Mm-hmm. Yeah, I think that's very important for everybody to learn that when you are looking at an opportunity, when you're looking at a deal, funding is always a component of that. And it's a question of how you're going to approach it. So if it's a single family or small multifamily, you have a much easier time of getting the seller involved. And one of my favorite sayings, the seller is the bank. And is there a way that we can have the seller be the bank through owner carry financing or allowing us to take over existing financing on the property, and then any equity that they have, paying them that equity over time and paying that equity maybe once you have a customer for that property. But when you get over into the commercial arena, it's a different kind of loan. And you don't have the protections of being able to do a subject to using a trust. You have a very different loan vehicle where the lender is totally in control. Can you talk about that a bit on the distinctions between residential and commercial?
Yeah, we're like the lender is in control.
Meaning the documents and being able to pull the loan at any time and being able to require the annual reports and things like that, and just the distinctions between commercial and residential.
Most certainly. A lot of differential, like when you close a residential loan, there's not going to be a whole lot of like after closing reporting, or if any. It's closed, it's done. Commercial it depends on the lender and what the deal is. Some commercial loans I see, they close and they don't ever, you pay the bill and that's it. Others I see have significant reporting, right? So when you get into securitized loan products, for instance, where think about it, like you're selling it as a security to somebody in the back end, and they need constant updates and reporting about what's going on. You may have to submit financials in the property quarterly to them, like CPA audited. Other areas that you can run into, I see some banks that have, like, for instance, like owner-occupied properties. They'll require the business, let's say it's a restaurant or something like that. I was just talking to a guy the other day. he has to submit a trailing 12, which is just the last 12 months, right, as P&L. And he has a DSCR covenant. If the debt service coverage falls below, I believe his was a revenue covenant. If his revenue fell below a certain area, they could call the loan and make him pay it off. There's no standardization in this stuff in commercial lending, but I do see a lot of that stuff. And I see a lot of that stuff in securitized lending and then owner-occupied properties.
So do you typically know that in advance, what the future reporting is going to be and what that's going to look like, and provide some guidance on that?
It'll be right in the loan docs. Do you know what it's going to be when you sign the term sheet? Not necessarily.
Not necessarily. That's an honest statement.
I've seen some surprises. Yeah.
Yeah.
But that said, commercial loan docs are much more negotiable than residential loan docs. I don't know anybody that ever negotiated like a residential mortgage. I'm not sure you can, to be honest. But yeah, you can certainly negotiate commercial stuff. But that's the thing in commercial, it's impossible to handle everything that's going to be in your loan docs up front without seeing the loan doc. And as you go through the credit process, like, things will change. And keep in mind that when you sign that term sheet, you're just starting the process of evaluating the property and all this stuff. And you're not going to get your commitment until way later on. So they may change. Things may change, and it's called in our business a retrade. And
yes,
for better or worse, once like the lender may say, hey, we're not comfortable doing it unless it's this. Nothing's guaranteed, right? So you never get commitment letters up front in commercial.
Yeah, that's a very good point. I like to tell people, he who has the gold makes the rules. And definitely you're going to have to navigate that process. Right. And one of the other things you said was that when you get the commitment from them, there can be changes along the way. So be aware of that what you think is true is really not true until you're actually signing the final documents. And
so what you'll hear is, here's our term sheet. We're going to close on these terms, or at least we always try to. We don't want to change it. We don't want to change it, but we're always going to try to hit at least like these. But there's so many things that can happen, especially on acquisitions. Like, in the meantime, this loan is presented this way, and we're offering terms on these, whatever.
Sometimes you feel like you're in a boat on wavy waters. It ebbs and flows.
A lot of stuff's out of your control. Like, let's say you're buying a building, right? And the real estate broker puts all their stuff in a certain way, and you present it to the bank a certain way. And then this is happening more often. Banks are asking for bank statements to corroborate like P&Ls. And then you get some bank statements and you find out the economic occupancy is actually much lower than the physical occupancy.
Oh, jeez. Yeah, people aren't paying. There might be humans in the building, but they're not paying.
There's 10 units rented, but half isn't paying. So good luck.
Bad news bears. And these days,
that happens a lot.
And we have to be aware that these days it's much harder to get people out than it used to be, depending on location, depending on how blue the local government is and how blue the judges are. It can be torturous to actually evacuate a building.
I'm in Cook County.
Oh,
I don't know.
For example.
Maybe but I had one guy. The thing is, like, some people are okay, you know what I mean? But I had one guy, man, he really knew how to work the system. I think he was in this unit for like over a year now.
Yeah. I've seen it. I've lived it. I know what it is. It's not a pretty thing. And I like what you said. And any of you that are watching today that are thinking about being a lender and being a private money lender or a hard money lender, something like that, is something to be very cautious and careful of. Economic occupancy versus simply that the property is occupied. We don't know if they're paying or not, and definitely being able to get the bank statements and prove that. That was a great point on that. Now, one more thing. Talk to us about the things that you would call are negotiable in a commercial deal.
Almost everything.
Almost everything. I love that. I love that. The rate, the term.
I don't want to say there's nothing that's not negotiable. Look, there's reality and practicality, and then there's just what's unrealistic. If you go in and you're like, I'm not doing this deal unless, again, it's 90% and 3% LTV and 3%, that's not gonna, right? But there's no reason why, when you're looking at a term, you can't ask for stuff. I ask for things all the time that I don't think I'm going to get, and I am pleasantly surprised that they're amenable to them.
Yes, I love
It's
that.
not just interest rate. It's like everything. So you're from a bank, I'll ask for a couple of years of interest only. They're like, oh, okay, yeah, maybe. I'm like, really? All right.
And what they're looking at is, can I sell this to somebody else? And often, and that's another point to make, is about portfolio lending versus, are they going to flip this loan just like we flip houses? Is it possible that they're flipping this loan? If they're flipping the loan, they have a lot tighter, more stringent guidelines than if they're going to keep it in-house. They can be a lot more flexible.
That's exactly right. If it's a portfolio guy, if it's a bank or credit union and their portfolio and they're keeping it, much easier to negotiate and get them to hold stuff on their books. If they're selling it, or if they're a credit union, they need to participate it. If you deal with any credit unions, that's a huge thing with them. It's going to be much less likely, much less.
Awesome. Awesome. Wow. What great information you have provided today. Now, do you have any parting advice, parting thoughts, people that really haven't done what you do and really haven't experienced what you've experienced? And you are you now, but you're you way back when you were first getting started in this business. And I'm sure things a lot differently than you saw it back then. What would your advice be to somebody just popping in here?
Yeah, I'm just going to like bullet point the stuff we talked about because I think we hit like the major things. Biggest things in our business is presentation. Make sure it's presented the right way. Don't offer too much information. Don't take the first answer as like the standard answer because it's not. Even just from bank to bank, even in your same town, you literally walk out one, go to the next one, you'll get a different answer. And then don't take the same answer from the same people that are same bank. You might just not be talking to the right guy. Remember, it's a relationship business. And I don't want to say relationship because every time I say relationship, it doesn't really make sense. It's a people business, right? The entire thing runs on people. And if you think about it from that perspective, it's good. I think you're going to get a lot further and understand how it works than if you're just like, it's just cold numbers. And then the last thing is really that I don't care what it is, if it's a house that you're renting, yada, yada, whatever, it's an operating business. And even your tenants, this is a good point. Your tenants are not your tenants. Your tenants are your customers.
That's right.
And so if you think about it like that, you really understand what you're doing and how to manage and operate these properties, which are investments, but they're businesses.
Yeah, that's a great point. One of the things that we realized early on is that management sucks, and most tenants are really tough. And so it's the mentality. So I shifted our business model to path to home ownership, where we help deserving families end up with home ownership regardless of credit or financial background. I converted all of our tenants to a different mindset. And then as tenants come to us now, we don't call them tenants, we call them clients. And they're joining a membership called the Path to Home Ownership. And in our world, we are certified affordable housing providers. So we have licensees of our system all across the country that are doing exactly the same thing in their local communities or elsewhere as well.
That's
and
really interesting.
isn't that a different shift, different mindset?
It kind of shifts some of that like ownership aspect onto them. So they're thinking it's like a different mindset. And think about like we're all guilty of this. A lot of tenants I see have the mentality of almost like when your internet goes out for 15 minutes and you just lose your mind and you call the intercom. Yeah, but it has like a 99.999% uptime. Yeah, we were out for 15 minutes, but we're all guilty of that's how the tenant landlord relationship feels sometimes. So I like that model. I think it gives them a little bit more understanding and insight into
You're right. It's a different mindset. And that's one of the things we like to expose here at the whole enchilada of real estate investing is a broad base of understanding about what real estate is, because it definitely has a lot to offer. There's definitely a lot of aspects that you can focus on. There's definitely a lot of opportunity. And we always like to bring you the best of the best. And Jake, you are amazing. And you've given us some great insights. You're a terrific presenter, and really excited to know you and looking forward to working with you in the future. Those that are joining us today, how can they find you?
I'm like the easiest person to find. If you could put all my contact information on the bottom, or just if you can't use Google, go to our website, whatever. I'm on LinkedIn. I'm literally always around to chat about deals. So
What is your website?
CloptonCapital.com.
CloptonCapital.com, guys. So definitely join and check in and make connections with Jake, because he's awesome, as you've learned, and definitely knows this game. Looking forward to seeing you again soon. Any parting words, Jake?
Parting words, just this business takes a lot of persistence, and it is not a overnight facet, but it is something that snowballs on itself. And so your work today will be your payoff 6 months from now, a year from now, something like that. So that, just keep in mind, like the benefits of what you're doing build up in the background, and then one day you'll just wake up and you'll be like, oh shit, look what I did. But it'll be like 2 years from now. So.
It's magical. It's magical. Just get with it and stick with it, guys. That's exactly the right advice. Get with it, stick with it. You can't help but win over a long period of time. And sometimes you have wins and sometimes you have losses. Don't worry about that stuff. Just get with it, stick with it. You can't help but win. Yeah, baby. Looking forward to seeing you soon. Thanks for joining us for the whole enchilada of real estate investing. Thanks for tuning in to the whole enchilada of real estate investing. I hope you're feeling ready to take your investing game to the next level. If you're serious about building wealth, you won't want to miss the Millionaire Jumpstart. It's a 3-day live event that's perfect for any level of investor. Whether you're just getting started or you're looking to scale, this can be one of the final steps of making real wealth happen. So, what are you waiting for? Enroll now at millionairejumpstart.com and get ready to make big moves in your real estate journey. I'm Lou Brown. Until next time, keep hustling, and remember, it's not about how much you make, it's about how smart you play the game.